Ben ritrovati giovedì mattina su Florida New York Stock Exchange. In questo momento indici piatti, un tentativo di recupero dopo 3 giornate consecutive di flessioni, ma ne parliamo con il mio ospite qui su Floor, che è Derek Orth, Designated Market Maker per Brandon E. Cryan and Company. Derek, thank you so much for being with us.
Good morning. Thanks for having me again.
So Derek, we are flat right now, but we have seen for 3 days in a row the market losing ground. The S&P 500 lost the 1700 level. Technically, what happened?
Well, earnings season, we're in the midst of it still, so we're having some volatility in the market. Technically, we're okay. I'm not seeing any bearish divergence signals yet with prices and oscillator with the SPX. RSI with price, you want to compare those two things to see if the market's actually losing momentum. Right now, we're kind of just trading along, consolidating on the move we've had. We've been testing the 1687 spike high from May that we had. We closed around it yesterday. We rallied back above it today. We're trending a little bit higher but there now. I'm looking at 1670 as an area of support. That was a closing high from May. I want to see if prices, how they act if they get down there. There's a kind of critical pivot point too, not too critical, but 1691 is an area a lot of short-term traders are looking at. See if we can close above that or not. If we close underneath that, maybe we'll retest those lower levels that I just mentioned. But if we hold 1691 today, I think you still have upward momentum. Again, earnings season, see what tomorrow brings, and closing, earnings at the end of the bell and tomorrow's opening. See if we have any more follow through there.
Even though we don't have that much going on, I mean, you were mentioning earnings season, but we are really at the end of it. Yeah. We already had the Federal Reserve speaking. All the big catalysts that we were waiting for the month of August probably have gone. So you think that during the month of August we might see these very short movements and very, very little volumes?
Well, another thing to try to look off and engage for the momentum and maybe the direction of the market is the 10-year yield. We spiked up to 275 a few times now, and now we backed off. We're at 2.58 right now. So we're kind of getting down to that 2.5 zone of it's a support level for yields, and I guess it would be a resistance spot for bond prices for the short term. So I want to see, we're not trading range, and if we can drift down a little lower, that's another reason not to get spooked by the sell-off in the market. Again, it's light volume. The 10-year yield is not spiking to levels where it's going to create interest rate spikes and people getting worried about margins getting squeezed. Refinancing the home is going to dry up because mortgage rates are going to go up, all that kind of stuff. So I think we're stuck in that 10-year range right now, that bond yield range. And, I'm looking at these numbers. It's quiet. Unfortunately, sometimes in technicals.
Very quiet.
Yeah, that's the thing. Sometimes it gets boring. And, but you got to keep an eye on things. You don't want to get complacent. That's why you got to constantly look at it, look at other areas.
And so I was going to say, probably is the lack of any catalyst. Probably until Jackson Hole, we are not going to have that many indication that might move the direction of this market.
And it could be, you got to look at too, what the market's been performing all year, where the fund managers stand when they compare themselves with that benchmark. How are the funds performing against the benchmark? Are they going to start, allocating more funds to certain areas, and that could be the catalyst to drive up markets. They got to catch up and beat that benchmark. Another thing too, another sector we talked about before is the stocks. Semiconductors have been a little bit lagging, a little bit weak. I think they're trading around under that 475 level I've been watching, around 473. Looks, technically we could, drift a little lower, maybe 465, 460. I'm looking for ultimate support there. But that's a catalyst I'm looking for too for the technology sector in general, outside of the other areas have been leading, like social media. Just that area to basically get back, hold these levels, get above that 475 zone, and have that run to those highs of 500 that we were looking at back before the Lehman crash. So I would like to see that kind of follow through, and I'm watching that area right now. Again, 10-year yield, the range in there is kind of important. And right now we're looking at this SPX where it's at right now. It's just holding, and it's a little boring today.
Well, as I'm going to say, yeah, exactly. The entire week has been like this. We have seen the lowest volume, so probably we are going to stay put for a while. A lot of people are not even touching, of course, their forecast for the rest of the year. The 1700 club is still there. A lot of people are still expecting, of course, the year to be over well above that. Yeah. You expect a big return after August? I mean, you think that a lot of people who have been in the sidelines for any reason, catalyst or not, will they come back at the end of the year and we might see that push up?
Well, speculation's always going to be there. It's you can't get away from it. That's what drives markets. Speculators come in and they're going to say, hey, I think this stock's going to be worth X, or the earnings are going to do this or that, and they're going to start putting their positions on, and that's what's going to drive things. And yeah, we're going to get into the second half of the year here, down the line, and that's going to be the catalyst going forward. And you want to try to do it before the move happens, right? So if things are starting to consolidate volume-wise, we pull back down in the SPX to 1670 on a light volume pullback, and oscillators is telling me they're not dropping to bearish territory. Oscillators is staying. RSI, for instance, is staying above that 40 zone, 35 to 40 in that zone on a pullback on light volume. That's a good area for me. That's telling me that if I want to get involved in this market, this is a good spot for it, because probability-wise, you want to trade off of that. You want to say, what's my best chance of success? And technicals help you there with timing. Your fundamentals are there for telling you what to buy. Technicals are telling you when to buy what you want to buy, and the timing is critical. So, as you all know, you could like something fundamentally all the way up here, and it comes down to here. It's still a great fundamental company, but the problem was the oscillators or timing of it wasn't there for you. You have to wait. So 1670 is a spot I'm looking for if it gets down there, but it might not. It might hold right here. And we'll see from going forward.
Perfect. Thank you very much, Derek, for being with us.
Thanks for having me. Thank you.
E grazie a voi per l'attenzione. A domani.